everybody. Dave Barlow here with Sell for 1% Realtors. Got Jay Marinsky with us and Rich Sircone with Equitable Finance. Rich, you're looking awful good this morning.
Well, I always do my best to look good for you, Dave.
It's amazing what camera filters will do.
Yeah. Yeah, I might need to go to makeup pretty soon. I'm not sure. Maybe an eyebrow thing or something.
Exactly. Hey, we are talking interest rates, our weekly interest rate discussion. And for the past 3 weeks or so, we've seen interest rates kind of stabilize at around 6%. I think you've been sending out the notices at around 6%. But this last week, we've seen interest rates go up a little bit. Can you kind of tell us what's going on in the market and what's caused the interest rates to jump a little bit?
Yeah, we did get down to a low of 6 and even close to the 5.875 level a few weeks ago. And what was happening at that point was that there was a consumer price index number, the CPI number came in, and it showed a slowing of inflation, slightly less than what was expected by the markets. And when that happened, the markets were elated and thought, "Hey, this is great. The Fed is going to start taking their foot off the brake or off the gas and onto the brake, and begin to lower or not continue to raise interest rates. I won't say lower, but not continue to raise the Fed fund rate." So that was the expectation. However, what happened at the next meeting with the Fed in late December was they did raise rates 0.5 point, which that was expected. But what was unexpected was that they came out and said that they will continue to be aggressive about raising rates in 2023. They don't see the need to slow that at this point, and the data will indicate what they will do, but they didn't give a good touchy-feely scenario to whether they're going to start to not raise rates in the future in 2023. So the mortgage market is always forward-thinking, and so when they hear a message like that, they think, well, there's going to be a continuation of rate increases in 23. And that caused that slight bob upward in the interest rates. And we're as of the close of business yesterday, a 30-year fixed with no points, 6.375.
Okay. So we saw a 0.375 jump basically about in the last week or so.
Right.
So Happy New Year's.
Happy New Year.
Thank you, Mr. Powell. We appreciate that.
Uncle Jerry, I call him.
Uncle Jerry. Yeah. Oh, boy. All right, Rich, I appreciate that. 6.375. You have lots of different products that you offer. You can help people buy $1 million homes or first-time home buyers and all points in between, houses, condos.
Right.
What's the weirdest loan that you've ever made, real quick?
Well, you're catching me on the spot here. There's been several weird ones. But I would say that, well, let me just say this, that the products that people are most interested in right now, from a standpoint of investors who are wanting to buy a home, would be products like the debt service coverage ratio loans, where you don't have to show income. You just show that the lease on the property covers the mortgage payment, okay, and you're good to go. Things like that are a little bit of off the beaten path products that people are interested in. Also, self-employed people who are having a hard time with their tax returns being qualified can do something called a bank statement loan. And so what we do is we get 12 or 24 months bank statements, and we average the deposits over that period of time, take off some money for the business expenses, and the rest is construed as income without any tax return necessary. So okay, that's a great product as well. Those are two off the beaten path products that people are interested in right now.
All right, Rich. Well, people, if you got any more questions, give Rich a call. His number is here on the screen, and he will be more than happy to walk you through your home investment lending needs. Thanks, Rich.
You're welcome, Dave. What I say to people is, listen, just give me a call and let's just talk a little bit. There's no pressure. This is a tough market for people to figure out what to do. So let's just have a discussion and, we can see where that leads us.
Sounds good. Thanks again.
Thank you.